Hey, everybody, welcome back. And here's the funny thing. Many of you are waiting for the feds to cut the rates, which have nothing to do with mortgages. And, well, that might be a big mistake. Let's find out. All right. So one of the key things that people have a misunderstanding is they think that the feds actually control mortgage rates. And that's not the case. They can affect mortgage rates, but they don't control mortgage rates. Those are publicly traded, and you want to take a look at your mortgage-backed securities, your bonds, things like that. The 10-year Treasury, even though they have nothing to do with each other, they do follow each other very close. And you might say, okay, George, what the heck? Why is that the case? Well, let's take a look at this. So first of all, got a great article, and of course you can see our little chart right there. Let's blow this up. And basically what it says is it's not a case of mortgage rates needing time to respond either. In fact, it's the Fed funds rate that will end up getting cut and, compared to the rest of the market. It's not an exaggeration to say that mortgage rates have already moved lower in anticipation of the upcoming Fed rate, which is going to happen in about 2 weeks. After all, the average 30-year fixed rate is down more than 1.5% from its peak, hitting the lowest levels in more than a year and a half. Okay. Now, meanwhile, the Fed fund rate has not changed at all during this time. That is a super important message. Everybody's thinking, oh, the Fed rate's going to come down. Yes. It's not going to probably have any practical effect because we have already been seeing our rates coming down. In fact, we have the best rates that we've seen in the last year and a half, down by, 1.5%. So when we take a look at all of that and what's going on, look, we're still going to see some momentum. We're still going to see some good pricing in Q4. That is a given. But if you're waiting for the Fed funds, I think you're wasting time on that one. My humble opinion. All right, let's move on. So when we talk about what's going on in the news, which is super important, here we go. Purchase applications respond to another small dip in rate. We actually had rates that came down on Friday. They could have gone either way, but fortunately they came down. As you can see on our price point there, we're at 6.27 or almost basically, just a shade above 6.25. And then the bottom left, lowest rates in a year and a half. Friday could take them to even lower. We just talked about that. And then, of course, remember, you also have a calculator for mortgages and rent versus buy. Gives you some good information. On Freddie Mac is at 6.35%. Rates have continued to come down. They have not adjusted to the Friday numbers yet. It's a running 7-day average. So they're just a tad bit higher than what pricing was on Friday. Listen, we're going to see some good interest rates in Q4. People are starting to come out, but not in the droves because the rates, they're not quite there. If they get into the high fives, a little bit lower in the sixes, I definitely think you're going to see a lot more folks coming out. There's a lot of things that are happening. We've got a lot of employment security in our area. Nationwide, the numbers are not looking so great, but we're one of the sweet spots across the United States, and we are definitely benefiting on that. Now, when we take a look at what's going on here, let's blow this up for you. All right. So we have the average days on market has actually gone up 6 days from June. So, we've gone from 29 days on average up to about 34 days on market. And then, of course, our running day, 7-day average here with the Northwest MLS, you can see that we've got 1,434 homes that came on market. And we had 1,157 that went off market. And you might say, George, what the heck? Why is that important? We're still seeing a lot of homes going off market as they're coming on. In fact, Friday being a big day, we had 3 homes that went on market ourselves. And so we saw a big bolus of homes coming on Friday. Tomorrow, these numbers are going to shuffle to where they typically where they're normally at. where we're seeing one for one. One home comes on market, one home goes off market, and we have been seeing that. And new construction has been taking a wee bit of a beating because of the resale homes coming on market and people taking advantage of that. Now, when we pop over, here's an important message. If you are interested in super accurate information, look, subscribe, like. The channel's free. There's no cost. There's no marketing. Just share. Let us know what information you like. Make sure others see it. And we truly do appreciate everything you do as far as bringing people into the channel here. All right. Now, when we take a look at what's going on with, let's open this back up, with our activity and how we're seeing pended, make sure you're looking at our numbers locally. This is our average for sale price, and then of course the highlighted average sold price. And we can see that in the month of August, we went down a little bit in what the average price is sold. Now, okay, so understand something super important. Just because we have an average sold price that went down a little bit, that doesn't mean home values went down. That just meant what was selling, the median, or in this one, the average sold price went actually down in the month of August. Not uncommon and seasonally normal. Normally it'll continue down, but we're flattening out a little bit, as you're going to see here on some of these other numbers. If we blow this back up again and take a look at the year over year, nothing has changed as far as the average price sold. It's the same, $847,000. Now, if we take a look at the month of September, it's still early. It's only the 6th here, technically the 7th, but we don't have the 7th yet. It's not done yet. We're up 5.9%, and in fact, the average list price is up $5,000 for the same month of September year over year. That's super awesome to take a look at, because what that tells us is that we're still seeing, again, another upward trend. Instead of staying a little more flat, we're seeing a little bit of a upward trend. Part of that is because interest rates have been coming down, same as last year, October. Remember, we saw a massive influx of sales because interest rates had actually come down 3/4, almost a point, and people kind of came to the game. As we continue to drop that down, we'll start to bring in more buyers. We haven't seen the big push of buyers yet, because a lot of them are just waiting. They're losing opportunities that are out there. Anyway, I'm just saying. All right. So if we pop back in here again and we head over and we take a look at volume, right? So we have our year to date on the right-hand side, which we're down. Well, let me just blow that up a little bit. We're down just 1% as far as pended volume. But it's basically holding about the same as it did last year. Same thing with the month of September year over year. It's still early. Everything's still in the green. We're still seeing homes coming on market in a good pace, and we're seeing homes going pended at a good pace. That's a dynamic number. When we look at our solds, that's what tells us where the tire hit the pavement. And even those numbers year over year are up. They're up 1%. It's a negligible amount. So we're pretty much right on target with where we should be, seasonally normal. Now, if we come over here, let's open this back up again. We take a look at new construction. New construction is struggling just a tad bit here, even though they're still offering a lot of really great incentives. Month end is a really great time to take a look at that. Look at these numbers. So our average here, let me blow it up a little bit bigger for you. Our average list price actually went up $5,000 year over year from last week, and the average sold price is actually down $1,000 from last week, or $3,000 over the last 2 weeks. But for the month of September, we got our stabilized price again. You can see it's almost 10% as far as the pendants that have come on, because they're showing all of the sales that they worked on at the end of August. Now they're showing them into September, and those numbers are starting to be a little bit more realized. But there's a lot of builders that are slowing down their projects because we're hitting our seasonally normal. although we're seeing a lot of projects being permitted, a lot of projects going through. 2025 is going to be, I think, a really good market for a lot of these builders that are out there, whether it's rentals, townhomes, condos, single. All right, I'm back. I don't know what happened there. Let's get our presentation back up here again. There we go. All right, so let's buzz down to where we need to be, and there it is. All right, so even though we've got a lot of builders that are coming in and giving us some really good incentives, and then we were taking a look at, there we go. We're taking a look at pricing as far as September is up almost 10%, as far as the price point of where it was a year ago. Again, that is something that we knew was going to bounce back. When we take a look at the velocity of numbers, as far as actual numbers of sales, hey, this is where it becomes a little bit more painful. So again, that number of, percentage of less homes selling year over year has been creeping up just a little bit, even though the solds for new construction have actually have come up for the month of September. They're up about 6%. That's a negligible, tiny little number. Okay. It's only a few homes. The key is that when we take a look at what is happening with new construction, as we're seeing more and more resale coming up, that is what is happening to the builders. And so with that, keep that in mind. And again, month end, quarter end, those are great times to take a look at new construction. And that's going to be super important for anybody that is looking for something that is new versus a resale option. All right. Now, let's hit the wall of shame here. Bank-owned homes, super crazy. Here we go. Again, there's only 65 actual bank-owned homes, not the 95. And, it's people just need to pay attention. But nonetheless, let's take a look at this. All of our numbers are down. All of our numbers are down all the way and straight across the board. Year over year, down basically 9% on sales, 18% on pended. And the nut there is that most of those pendants, it's a mix of homes that are not foreclosures, they're not bank owned. And so we're getting a mix, even though, we let the MLS know and they try to go in and correct them. There's only so much one person can do. Nonetheless, just understand there's small inventory of foreclosures. They are not a big deal to go and look at. Because there's so few in this area, they're doing paint, carpet, and vinyl and getting them back on the market at market value. Yes, they stay on the market longer because they do push price, because in their perception, they can't leave dollars on the table. They end up losing dollars on the backside the longer that they're on the market. There you go. Anyway, if you have any questions, put them down below. Absolutely want to hear what you have to say. Remember to hit that bell so that you know when you're getting this updated video. Share this with 2 people you don't like and 1 person you do like. How's that? And in the meantime, I'll see you on the next video and have an absolutely beautiful weekend. Take care.